Hi everyone, this is Bagadon at Stock Market Caddy. It is April 30th at 10:30 p.m. And today was a Fed day, rather a modest Fed day. And I just wanted to come in and give everyone a quiet glimpse of what we are seeing in the markets in a bit of a interpretation. This is a purely a technical view. This is the product from RaidStation called Radar with our proprietary systems. This is the main strategy. And then we have dynamic stop levels. We have what we call the weather, the slope rating, the wind direction, the fairway width, and all these different clubs that impart tremendous amounts of information at a glance. So we can interpret this on a 60-minute, 240, daily, weekly, monthly. So we can see what the intraday traders are doing. We can see what the investors are doing and what they're thinking about. And we can see this using all the same tools on all of the markets. Now, we're not going to go through everything, but I want to bring, as we do this, bring your eye. We're going to do this live, if you will. The first one is the volatility index. This tells us when folks or hedge funds are buying protection. It's a contrarian indicator. So when it is short, they are not buying protection. They are fearless and they don't want to waste the insurance money. And that generally coincides with a bullish stance in the market. So you can see the volatility index continues to be a great indicator in that it's all short, all time frames. We are seeing a pickup here, though. It's interesting. We got what we call the siren call, an upward siren on the 240. So we want to see what develops tomorrow. Is this a warning shot here? We have a little bit of a tailwind. The fairway width on the 1 hour is narrowing, and when it gets narrow like this, it can hint of a change of direction. So these two, maybe, just maybe, there's going to be a spike in the VIX tomorrow, which could coincide with a little pullback in the market. We're also seeing on the longer time frames on the VIX, this being the weekly and the monthly. Granted, they're at lows, but we have divergence and we have the hint of a stall, and that is telling us that the VIX may not be going that much lower. If that's the case, the VIX then could only go up, and if that's the case, then maybe the markets could be coming back down for a retest. But let's go over and look. Let's look at the S&P. So let's scroll down. This is what we do for our subscribers, either myself or Caddy Sue or one of our caddies. Oops, I'm sorry, bring this back into view. Okay, so here's the S&P, and you can see it is long. The daily is flat, and it's been sunny out for the bulls. So there still is this tug of war going on. The shorter time frames, the investor class is still long, and they're at their stop levels, so they're sound asleep right now, in more ways than one. And then you look at the Russell, though. Now, this is what's interesting here. The Russell continues to flag. It is on a short mode on the daily, and we're getting hints on the monthly time frame. Look at this. We're getting a hint of a sell signal on the monthly on the Russell. Now, why is this important? Well, we'll come back to it in a moment. Just remember about the Russell. The NASDAQ had been really hammered. It's gone into a flat mode. And then the Dow. So the S&P is all long. The daily is flat. But we're even seeing on the monthly and the Dow the hint of a stall. Now back to the Russell. Let me bring this in the S&P and the Dow. The Russell is where all the small speculators live. This is the real fast money. With people picking up 10-15% in a short period of time or more. The momentum led us up. The Momo stocks was in the Qs and in the Russell. These now are the weakest of the two markets, very significantly weak to the S&P and the Dow. And the analogy we draw is that this market has had so much momentum. This is rather an ugly metaphor, but I can't think of another one tonight, and that is when flight TWA 800 went down off of Long Island. They described whatever happened out there, that the nose cone of the plane actually detached from the plane, as gross as that is, and yet the plane, because of the speed of the plane and the aerodynamics of the plane, it continued to fly and actually rose. And that's what I think that we have going on here. The nose cone, the leadership in the market, namely the Russell and the Qs, has fallen away. Yet the S&P and the Dow is continuing to rise. Now, one of two things are going to happen. Either, which couldn't happen, unfortunately for those poor souls on TWA 800, the nose cone is going to reattach itself and continue the move up. So we want to watch over the next 1 to 2 days what happens with the Russell, what happens with the Nasdaq, in particular with the NQ, or not the NQ, the volatility index. If the volatility index spikes and the Russell break down further from here and the Qs, the SPYs and the Dow will ultimately stall out and join the move down. That's what we think is going to happen, but as you know, we just trade off of our systems using the radar, using all of these basket, if you will, these bag of clubs, and we have these systems automated, and we trade accordingly, and we trade multiple time frames. So in any case, I hope that helps. That's our perspective from a technical view. Be careful, take small bites, and I would certainly be very careful going on the long side on the ES or the Dow, and I would be also careful going short the Russell and the NQ at this point if you're not already short. If it does roll over, I think your best bets, risk reward, would be getting short the ES or the YM. If the nose cone is going to get reattached, getting long the Russell or the NQ. What is your trigger? Watch the VIX. Look for the VIX to pop. The VIX pops, then you know what to do. Get short the Dow or the ES. Ride your shorts here if you're already in. That's how we're going to play it, and this is what we're looking at. And good luck. Oh, I can also bring into why we also have a bit of a bearish view. Let's bring down here. I'm scrolling. Don't make anybody dizzy. Look at the 10-year bond long, 30-year bond long, folks. This is also not a contrarian indicator. It is a divergence. If the move in the Russell and the SPYs is for real, then the bonds should be selling off. They should be short, and they're not on these, even on the longer time frames. So next couple of days and Friday are going to be important. Not so much for the jobs, but just of where we are at the end of the month. Possible we get a little window dressing here at the end. We get into the first part of next week, May. I think we're going to have a real good idea where we're headed. Good luck. Be careful. I hope it helps. The follows are free, and if you have an interest in learning to write your own strategies so you don't have to listen to all the old Wall Street types, give us a call anytime. Be in touch.